Hello, today I'm going to be looking at cash flow forecast variance analysis. And before you start screaming and running for the hills, all that really means is just making a comparison of your forecast figures and your actual figures, and really it's taking the difference between them and looking at what you've got, and then using that as an opportunity to go back and say, well, why is it like this? Why is it like that? What I have here is a slightly different format for the cash flow forecast. I've included a variance column, which I'll talk about later, and I've included a total variance down there, and then a net inflow or outflow, and I've just literally taken total cash inflow, your income 200, minus your expenditure of 190 to get you total inflow or outflow. So we've got our forecast, as I say, from before. We had a bank balance brought forward of 100 even, plus the net inflow that we actually get, which is the 200 minus the 190, and get a bank balance carried forward. And obviously that is done by way of formula. So the first thing we probably need to do then is to insert our actual figures. So if we go back to our expenses and income example, the first thing we need to do is to check onto our income. So we can see, if I move that over to the side, hopefully you'll see, that the total for the month that we've actually banked is 193. So all we need to do is just insert 193. Now you can do this by way of formula that picks up each time, but I think it's probably better just to keep it simple, keep it safe. And then in terms of expenses, what I do is I always pick up the total figures and insert them into something new. So it's not going to be in quite the same order, but it doesn't matter. So petty cash, we had an actual of 10, and from before, if you remember, our room hire was 30. Our adverts are 10. Our printing and stationery is 20, and our drawings are 50. So you can see from that, well, we've just set up, recorded our accounts, so that's pretty good. So the income that we've actually got is 193. The income that we expected was 200. So we've actually got a shortfall. So we need to think about why that is. Did we have sufficient sessions? So if we go back to here, income completed, we expected to have 8 sessions. In fact, we had 1, 2, 3, 4, 5, 6, 7 sessions. But actually in some of them we've actually managed to charge at a higher rate. So we've got a variance here, which means it's less than we expected. So the formula is, as you can see from here, plus C5 minus B5. Okay, in terms of our expenditure, the room hire we expected to be 80, we've actually only spent 30. So the way that this formula works, it takes B10 minus C10. That's B10 minus C10, or minus C10 plus B10, it's the same thing. And we need to probably question, now why is it that we've actually paid less in room hire than we anticipated? Because if we've had 7 sessions, that means implies we've spent something like £4.50 rather for room hire rather than £10, which we originally anticipated. And if that's not correct, it might mean that we've missed something out. So it gives us an opportunity to go back and check, and that's really what we want to be doing here. Remember that the actual is the figure that goes into the bank account. So the advertising and marketing, we forecast 20, we only spent 10. Does that mean that we are not doing enough marketing and advertising? Or does it just mean that actually we managed to get a better rate than we actually anticipated? Our printing and stationery, similarly, we expected 10, we've paid 20. Now it might be that we've actually got more printing and stationery than we anticipated. or we just might have completely underestimated the amount that we need to spend. So again, it's one of those things just in terms of trying to think, okay, what actions do I need to take? Because the whole point about doing this is so that whether you do the variance analysis or not, as I say, it's probably one of the most complicated things to actually deal with. So whether you do it formally or whether you do it informally, the point is that you still make a comparison and say, right, our income is less than we than we expected, so what can we do about that? One other thing you might notice is that our telephone, we've actually estimated to pay 15, but we don't have anything in there for actual. And this might be that you've actually got a telephone or mobile contract which is on your personal account. In this situation, because you want to keep your bank account clean and only for business purposes, maybe what you could do is to actually make a check out from your business bank account to your personal bank account, or transfer it on, if you've got internet banking, for the business amount, so that what is reflected in your bank account for your business is actually what's referring to and relating to your business in total. One of the actions that we can take, for example, let me just give you an example. Suppose we'd actually had to pay our subscription in March rather than April. That means that now if, for example, we'd had no money to start off with in the bank account, we would have now hit overdraft, which means that we'd also be hitting bank interest and charges, and we certainly want to avoid that. So, for example, if you know that you are paying out your subscriptions earlier, or you're paying out any expenditure earlier than you anticipate, you may need to change the amount that you pay yourself, your drawings, in that particular month. So it's all about using it to give you information so that you can take immediate action so the situation doesn't get worse. So just to confirm that we started with a bank balance of 100, our total net inflow or outflow, well, just get rid of the descriptions bit, we're saying is 73, so our total bank balance carried forward is 173. And that's basically about it of what I was going to say today. If you find this a bit complicated, don't worry, ignore the variance bit, just do the first two columns and just make a comparison by going down and then using that to make any adjusting action that you need to do. Remember, keep it simple. Okay, that's it for now. Goodbye.